Hello, members one and all of the Salivation Nation, and today we're going to be talking about gold and silver price manipulation and suppression. And there's a wide range of opinions on the matter as to what causes it and as to how effective it is for the prices of gold and silver. You know, what complicates the matter is that both gold and silver, and even the other precious metals, especially such as platinum and palladium, they are commodities as well as money. One thing that is certain is that they are not currency right now. However, we all know that the dollar is obviously being manipulated itself, and it is currency, and it has lost a lot of value over the years, especially since 1913 when the Federal Reserve Act came into being. But nonetheless, it is quite fascinating, and since my time here in the silver and gold community, I have noticed that there's a wide range of different opinions on manipulation and suppression of gold and silver prices. And, I usually have very strong opinions on things, but this is one where I'm kind of in the middle of the road. I recognize that there is suppression and manipulation of the markets, but I don't think I only think it can only do so much. I believe that the natural forces at play with the precious metals prices are actually larger than the manipulated forces at play. And so it's sort of a balanced view, so to speak. In other words, I believe that the natural forces are powerful enough with the way economics and the like are, especially these days, and especially since the 2007 crises, that there's only so much that can be done with regards to suppression. Because if you look at a long-standing chart of gold and silver over the years, you see that it's been relatively stable for the most part throughout the 90s and the like. The prices of gold and silver have pretty much stayed relatively level, with some spikes here and there and the like because of certain things happening. Obviously there's going to be some volatility, but it's not as erratic as it seems to have been since the 2007 crisis. Donald in New Mexico sent me an article here, an opinion piece by Pat Heller, and I'm going to kind of be referencing this through the video that talks about these price suppression markets, timing and everything. And we'll first get into, well, what about the U.S. government? The U.S. government itself set the price of gold, and so by law it was, I think, $20.67 until the until the act with the executive order where FDR confiscated the gold, and then the price went up, I believe, to $35 an ounce. And even to this day, as mentioned in several of my prior videos about Fort Knox, well, gold is priced right now, according to the government, at $42.22. The U.S. government is the largest beneficiary of low gold and silver prices. When precious metal prices are low, foreigners are more content to hold dollars. Of course, this helps hold down the interest rate, and the federal government pays on its debt. For every 1% decline in the interest rate that the U.S. government has to pay on $20 trillion in outstanding debt, that reduces the federal deficit by $200 billion per year. If the interest rates go up, then it will boost the size of the federal deficit. So we see that the government itself has an interest in low gold and silver prices. And then the foreigners hold massive quantities of U.S. dollars and treasury debt, is that the United States receive goods and services in return for exporting this paper. And should the foreigners want to reduce the holdings of dollars and goods and services that will be exported from the U.S. in return for the import of paper obligations, this would have the effect of not only increasing the federal budget deficit, it would also lower the standard of living for Americans. So, and then we talked about their legal authority, that the U.S. government established with the Exchange Stabilization Fund, and that's essentially where the was funded with $2 billion of U.S. government and $2.8 billion of paper profit when it realized that the price of gold after the confiscation went from $20.67 to $35 an ounce. So it's quite interesting and where the government has a role in play in this. Then it talks about the mechanism that the U.S. government has and how it does relatively little with direct financial market manipulation, in spite of things like Dodd-Frank and the like. But it's and the trading partners, they influence them, but they're not necessarily required to follow the orders of the U.S. government. So it's kind of a shaky ground there, and that's why people believe that the U.S. government is just turning a blind eye to obvious manipulation. Even to the point where one Andrew Maguire went to the authorities, to the regulators, and exposed it, and they saw it live, but no one went to jail or anything and the like. So, and then the question is well, how was this happening? And there's so many different ways that the precious metal markets can be manipulated. And I'm going to list a couple here based off of this article. And if you know of any others, feel free to chime in the comment section below. But they can happen when executing trades during thin volume trading times, which magnifies their price impact, and entering large one-time sell orders that will tend to realize the lowest possible selling price, which is not the way that profit maximizing sellers would disperse their holdings. It kind of plays counter to what one would think. And then executing trades just before events happened that influence financial markets. Changing commodity market minimum margin requirements for levered transaction to force some long positions to be unexpectedly sold out. Propping up stock market prices, especially through trading in index futures to draw attention away from precious metals. We talk about short selling and the paper markets and all these the number of ETFs that are out there and the trades and the like. And then there's obviously there's timing with all of this. Right before the U.S. financial reports are issued, such as monthly jobs and unemployment reports, the quarterly gross domestic product data and consumer price index. So they pay attention to that type of thing, and that has an impact on the markets. And talk about timing. We talk about how these bullion dealers, offer these sales, for close to spot or just right at spot, or what have you, for gold and silver. And so you have to wonder if there's something out there that they know, and they're into these patterns, and they can read these patterns. And so, going into meetings at the Federal Open Market Committee, before major politicians give major addresses or testimony to Congress on matters related to the economy or financial markets, or in the last trading days of each month, especially those that are at the end of the calendar quarter, and before the beginning of major international financial conferences, such as those of the International Monetary Fund, World Bank, etc., or on days when gold and silver options contracts expire on the New York COMEX or the London over-the-counter market, or just before or right after holiday weekends, like at the time of the recording of this video. We're still seeing the prices go up. So I'm wondering if there's any effect with some of these suppression efforts as of late here. But nonetheless, it's there's a lot of things going on, and because I believe they're still trying to suppress as much as they can, there's only so much they can do, and the prices are going up anyway. So I thought it was quite fascinating, some of this, and especially after reading this article. We have a lot of things going on with Hurricane Harvey, with North Korea saber rattling again, with tests after tests, and all sorts of different things. The jobs numbers and all kinds of different factors come into play. And of course, you still have the national debt, which looms heavy. We have deficits. We have, there's no tax cuts yet. Obamacare has not been repealed. So post your thoughts below on what you think about this subject. I'd like to extend a multitude of gratitude to y'all for watching, and encourage you to please rate, comment, and subscribe.